What's up? All right, little impromptu video. Check out the ocean over there. It's a beautiful sunset. So, one of the things that we've been discussing in DMI is investing capital in the places where there's the highest demand. And one of the reasons that the opportunity exists to get such high multiples or high returns, low multiples, high returns in micro private equity is because there's such a high demand for capital. And it's the same thing we're talking about the angel acquisition strategy. What it comes down to is that these two places are places that you can't really go to traditional investment banks, and in a lot of cases traditional banks, to get access to capital. And so what you have to give in return for that is high returns. So the person that is selling their business and they're like, hey, I realize there are businesses out there that are on the stock market at a 40 multiple. I realize there are other businesses that get strategically acquired for a 15 multiple. But in this micro space, I realize there's not that high of supply of that money. So I'm willing to offer you a lower multiple at 3 instead of 40, instead of 15, so that I can attract a buyer. And so it's interesting when you look at it from the perspective of supply and demand. It's just there's not a big supply of available capital, so I have to make my offering attractive in order to get access to some of the capital that is there. So it's one of the reasons I love investing in these deals, even outside of acquiring, is because there's not a lot of supply. So you bring that over to the angel acquisition strategy, and it's really the same thing. I mean, it's these people have, number one, a lot of risk, which is one of the reasons that there's not a high supply. And so if you find one of those deals that lines up with micro private equity and it lines up with kind of the angel space, so it has this high potential to grow and have a massive exit, but it still meets our criteria from a micro private equity space, you can get in and still have that really low multiple, but now you're playing in a game where it can exit at that 15, 20, 30x. And so when a business can have high growth, there are a lot more people that are willing to pay those high multiples. So it's kind of this arbitrage between supply and demand. You're playing in one world where it seems like there's not a lot of supply, and then you move it to another world where there's plenty of supply. So I wanted to drop that concept to you guys. Hope you're having a beautiful weekend. It's a beautiful night here, and talk to you guys soon.